All right, this is James Smith at Gann Analysis, LLC. Today I want to talk about the dollar and the 50% retracement. If you take this high back here, looks like it's back in 2001, and the low here in, well, let's see, 2008, that is the swing, and we divide the swing into 8 equal increments, retracements, if you will. So 1/8, 2/8, 3/8, 4/8, 5/8, 6/8, 7/8, 8/8. The 50% retracement or the 4/8 retracement is the most important one according to Gann. Now, there's more than just price divisions here. We also have an element of time. So from the March low, March 2008 low, to the March 2020 high was exactly 144 months. Now you also have a 180-month cycle, 25-month cycle, close enough to 24. 24 would be 2 years. 60 is 5 years, 60 months from that high. These are all important cycles. They gave us the high in March, and I told clients back at that time, get ready, this thing's going to sell off big. And when it takes out the 50% retracement at 95.86, you will see a slide. Now, initially we got a pretty nasty sell-off, rally back. I think we're about to start the next leg down. Ultimately, I think we're going back to 70.70 to retest that March 2008 low. Now, maybe that takes a year, maybe longer, but that's where it's headed. So with Gann, it's always about two elements, time and price. You have the initial observation that a cluster of cycles is calling for a change in trend. Then you confirm it with a close below the price support at 95.86, which is the 50% mark. So in doing that, this is a long-term chart, so it's indicating a long-term decline. And you can see last week, the dollar started to weaken. You should be looking at commodities because the dollar weakness will give a bid to commodities. Not just gold and silver, but, corn, soybeans, sugar, a whole range of commodities will go up dramatically as a result of a weaker dollar. And also, it's kind of interesting if you think about the effect that a weak dollar has on the stock market. Initially, it should be a good thing, but if this thing gets out of control, it's not going to be a good thing. And it begs the question, a lot of people wonder, why is the dollar getting weaker? Well, obviously, the Fed's printing a lot of money, and you saw last week the bond yields start to rise. So the Fed may decide that they want to support the bond market. They're caught in a choice. They either support the bond market by printing money to keep bonds from crashing, or they support the dollar and just hold off without printing as much money. So it is a very difficult choice for the Fed, but it's clear to me they're going to support the bond market because the bond market is the biggest bubble on the planet. It is huge, and when it crashes, it'll be a nightmare for everyone. So the Fed is taking the lesser of two evils. It's decided that, hey, a weaker dollar is maybe a net positive for the economy. It helps exports, but I think what they don't realize is the dollar weakness is going to start to have its own downside momentum, and this is going to run away like a freight train off the rails. So the problem is that a little bit of weakness is good, but too much weakness in the dollar is not good for stocks, for bonds, for a whole range of things. So financial markets are not going to like a crashing dollar. It's just not going to be a good thing. So this presents a view on the stock market, which I'd like to discuss with you. Register to the website. You'll get some free reports. If you have a particular market that you're interested, let me know. Maybe we can help you out. I'd love to get you started on a trial subscription, but at the very least, if you register, you'll get some free reports, and an introduction to Gann's way of viewing the markets. So this 50%, just to recap, the 50% retracement is the most important retracement of the swing. And taking that out was a long-term bear signal. So obviously you're going down to 89.56, you take that out, you go to the next one, and so on. But my only point is these cycles are huge, especially the 144-month cycle. It's telling you you're getting a huge change in trend. So be ready for a financial earthquake. This is going to be big. And when you see it sell off, just be aware that, it's going to gain downside momentum as it goes. So I hope this has been helpful. Welcome your feedback, and I'm always happy to discuss the markets with anyone who shows an interest. You can reach me at jamessmith@GannAnalysis.net. Like I said, you can also register to the website GannAnalysis.net. Good luck with your trading. Hope this is helpful.